We like to invest in category creators who are starting something new, who are picking up a painful topic that not many people want to talk about or has been taboo for a very long time. I think that's where we really shine, and we have found some really valuable companies in the early stage, ignored categories.
This is the Angel Next Door podcast, where we will talk about all things angel investing, what it is, who does it, how do we find them, what does it mean to invest in an early stage company. If you have ever wondered how you can affect the change you want to see in the world, then tune in to learn more. In this episode, I'm talking to venture capitalist since age 23 and fellow Show Her the Money colleague, Pocket Sun. Pocket tells us how she broke into the male-dominated venture capital world by addressing the funding disparities faced by women entrepreneurs. She shares amazing stories of backing early-stage companies that have now become industry leaders with even a few unicorns in there. We discuss navigating cross-border investments, and she offers a peek into her innovative approach to personally investing. And she shares a few success stories like her investment into Everly Health. Enjoy the show. Pocket, welcome to the Angel Next Door podcast.
Thank you. Very excited to be here.
I'm excited to have you and tell us all about SoGal, how that got started. Tell us about your own angel investing journey. And there's so many things that we can talk about. You have so many amazing portfolio companies that we saw in the documentary Show Her the Money, which we were both a part of. So I'd love to hear you tell us a little bit. Why don't we start off with a little of your background?
Yeah, I started pretty unconventionally. It was 10 years ago. I was at USC doing my master's degree in entrepreneurship and innovation. So you could say that I was academically trained to do what I do now. And in that process, I fell in love with startups and very quickly realized that why am I the only woman in the room always? And everyone else doesn't look like me. And is this a world that I belong to? So with that context, I decided to start a community first to really connect women entrepreneurs who have world-class ambition and hustle and genius, but they were largely overlooked and 100% underfunded. So yeah, quickly grew first in LA. And before we even launched Fund One, we were in 12 global chapters on different continents. So it really proved that there was such a big need from women entrepreneurs who were not taken seriously. And eventually I decided the best way to support them is not events, is actually investing in them. So I decided to start a venture capital firm. And before I was able to do that, I started doing angel investing so that I can build my own track record. And I started my first angel check with $1,000 on a platform called AngelList in an AI company back in 2015.
Wow.
That was how we got started. And fast forward to today, we've invested in over 150 companies around the world across many different continents. I've also personally invested in other venture capital funds to support the next generation emerging managers. And it's been such a rewarding journey.
That's amazing. So 150 companies just through the SoGal funds?
No, so many are my personal investments. So I still do those very small personal checks on AngelList and elsewhere when I see something that's very compelling. And I really see angel investing as a way to learn about different fields that I don't have an insider network on. So I think to some extent, angel investing is subscribing to a really valuable newsletter or getting into a very interesting membership club.
Yes, I completely agree. That's what I talk about a lot in my book. So how do you pick the companies that you want to invest in? Do you have a certain personal thesis? And then I know that there is a thesis, obviously, for SoGal.
Yeah, I'll talk about the SoGal thesis first. So through the two funds at SoGal, we manage about $55 million of capital, and we have invested in almost 50 unique companies, and over 90% of them are led by at least one woman co-founders. Diversity is very important to us. I don't care what the DEI backlash is saying right now. I started the community in 2015. We started the fund in 2017. So we were there before the Me Too movement, before DEI was ever a thing. So that is very important to us and is the foundation of what we do. So we do believe in the huge value of group of people, women or other underrepresented groups who have been very much underfunded in the venture world. They bring such lived experiences that were not taken seriously in the venture world. And when I started in venture, there were so many areas that women were starting businesses in that were not taken seriously as a venture backable space. For example, beauty, and for example, beverages. But these things, as we see in the new like Poppy acquisition, close to $2 billion acquisition by Pepsi, it's a soda company founded by a female founder, and lots of huge beauty exits that happened with very high multiples. So these things were not seen as venture backable when I entered the space. So we really wanted to invest in underrepresented groups, bringing undersolved problems to the table and solving it with their unique resonance with that problem, lived experience, so that they are actually building for people who have suffered from the same pain point, but no one had taken it seriously before. So an example would be like recently we invested in a company that's focused on digital health for mode-related diseases. And it's a global phenomenon. So many people are impacted by it, but it's not taken seriously by the modern Western medical system. We like to invest in category creators who are starting something new, who are picking up a painful topic that not many people want to talk about or has been taboo for a very long time. I think that's where we really shine, and we have found some really valuable companies in the early stage, ignored categories.
Yes. Tell us a little bit more about the cross-border investments. Like, how does that work? Because I know I've done some myself and they can be a little complex, to say the least.
Yeah, for sure. When it comes to personal, it doesn't really matter to me. Like I've invested in Africa, Latin America, I've invested in Pakistan, like all sorts of different geographies. As long as they have some standard docs, like I'm fine with it. When it comes to SoGal investments, in Fund One, we were a bit more international. We invested across many different countries. But as a fund, it's important that you are a value add to these companies versus as a small angel, sometimes you just need to have a check and you have this company has other investors at the table to support them and you can just be complementary to that. But as a fund, investing in a cross-border way was a little challenging because every time you venture into a new country, you have to understand how the legal docs are written. How, like, for example, in the UK, you might not have preferred shares, right? Like everyone is a common shareholder. So there are a lot of these things that you need to understand every time. Plus, I think what's more important is after you invest in these companies in, say, Australia or Sweden, if you don't already have this network of who are the downstream investors that I can help this company meet, or who are the C-level executives that I can introduce to these companies so that they have plenty of talent down the road, or do I have an existing audience there so I can help promote their products and services? And it's very difficult to have this kind of networks in all the different geographies that you invest in. So as a fund, we realized that we're more effective in North America. And that's where we decided to focus on in Fund Two. And it has saved us, I think, headaches because lots of cross-pollination could happen between your portfolio companies. But I still think I'm still super interested in emerging market. One of my big misses was this company in Africa that was creating the Tencent of Africa. And Tencent is a huge company in China who started with gaming and eventually got into social and finance and news and pretty much every category under the sun and became a mega player in tech, similar to if you think of a Google scale company. So I missed that company because we were not super comfortable like investing in an African company. We felt like we didn't have the necessary information to do that. But yeah, you win some, you lose some, and you learn some, right? So
That's right.
yeah.
So what are some of the other ways you mentioned a couple about how you add value? And so is the community that you had originally set up, is that still something that you tap into? Or tell us a little bit about that and then how you and Elizabeth and how do you basically get energize or activate your LPs even to help, or what are all the ways that you add value?
Yeah, so I think community is still at the core of the SoGal brand. After COVID, we stopped doing a lot of the in-person things that we used to do. So right before COVID, we had 60 chapters around the world, 5 continents. So it was pretty massive. And we were hosting global pitch competitions and we were super active with all these local chapters. And I really had fun doing that. After COVID, we switched to more online programming and we started doing angel investing training for women, which was very fruitful. Nowadays, we have communities for our LPs, and you're a part of that. It's really fantastic to see LPs connecting amongst one another and LPs really engaging with our portfolio companies' growth and value add. We also double clicked on founder communities. So now we have a WhatsApp group for all of our SoGal founders. So this year we started testing like SoGal Founder Masterclass. So we just hosted our first AI training for founders, which was very well received. So it was a 2-hour session where we had this expert who was also a SoGal LP to talk all about how to implement AI tools in your daily lives to make you way more efficient. So that was amazing. And we're planning to do more master classes around, for example, like affiliate marketing, how to get on top publications without paying for ads, and how to succeed on TikTok Shop. So things like that that are gems of information that are very well needed by portfolio founders, but they don't have a place to learn about this kind of exclusive behind the doors type of sharing. So we bring best in class people to our founders that way. And a lot of our founders, they just support each other. We have created this, I think, vibe of a family where they share audiences, they share cost saving tools, they share best hidden secrets that help them be more successful. So I think people just love being a part of that. And 2 years ago, we transitioned from Fund 1 to Fund 2. And Fund 2 is where we lead more deals. We play a more significant role for the companies. And that comes with board roles, more governance responsibilities, and just more chips on the shoulder in general. So we've been getting pretty deep with our portfolio companies, looking at their finances line by line and helping them renegotiate their debts and help them fundraise, help them refinance, help them make like multiple intros and help them prep for investor meetings. And it becomes so hands-on. So yes, I think Fund 2 helped me become more of an operator thinker, which has been very valuable to me. And yeah, like you feel very in the weeds with the founder, even on a day-to-day, week-to-week basis.
Yeah. So how do you do that? Because that can be so time consuming, if not just taxing. So how do you manage all that?
Yeah, so constantly, I think as a fund manager, we have to relentlessly prioritize. And so we prioritize based on ownership in these companies who could be the needle movers in our portfolio. So on any given day, I prefer to spend time with companies that could yield a meaningful outcome for our fund and for our LPs. And it's a very dynamic process. And then on the other hand, I try to create levers so that I don't get drowned in all the things I could do. So being a small team, I think it's all about precision, how to be super sharp in adding value in the most valuable way at any given time instead of trying to be everything for everyone, which is not achievable.
That makes so much sense. In the film, you actually talked about how hard it was to fundraise, especially for Fund 1. And then once you got to a point where you were fundraising for Fund 2, some of the people that you had originally talked to, they weren't even in business anymore. I love that part of the story. So tell us a little bit more about that. Give us some of the behind the scenes look at what fundraising was like at the beginning and even now.
Yeah, I'd say for any emerging manager, fundraising is probably the number one challenge, especially for women who didn't have sales training. I think overcoming mental hurdles is such a big topic and ongoing lesson. So I think fundraising for Fund 1 and Fund 2 really helped me become more comfortable with asking people for money, which to me was such a dirty phrase in the beginning. But now I'm still much more comfortable. I see fundraising as an energy exchange. If you offer something of value and you truly believe in that, then it's not about asking people for money. You're not begging. You're not forcing something on someone. It's you're offering something valuable and it's about finding the right fit. And it's a mutual selection process. And I think that mindset shift is huge for someone who's fundraising. And you have to run a very tight process. You can't just talk to someone and at the end of the call, you don't even know if this is a high value lead or a long-term lead that you need to nurture or someone who you just shouldn't spend more time on. So I think fundraising has really taught me to be more direct and to be just very driven to qualify your leads and warm up your leads and on one hand, give them time to make a considered decision, but at the same time, like who is worth pursuing more down the road. And I think fundraising for a fund is really tough because it's difficult to set a timeline. Usually a startup round could close in a matter of months, sometimes weeks, but a fund, you're talking about at least 18 months usually, or even longer.
Right.
So you have to deal with people's desire to take their time and not come in until the very end. And I think that's a testing thing for people who are fundraising. But at the same time, I really enjoy being able to meet new people and hearing their stories and understanding their motivations in the fundraising process. And I think we've built a very powerful, very diverse, very strategic LP family for our founders. And it's a hand selected community of people who align with our values, who care about what we do, who click with our strategy and how we do things. And it's very precious. I think it's a very unique ride.
I completely agree. I love the community that you've built and the way that you make sure that people know about the things that are happening within the portfolio companies. Sometimes there could be news, but we wouldn't necessarily see it, depending on nowadays, all of our news
Yes.
outlets are very different than
Overwhelming.
they usually are, right? But that part of community, I think, is so important. And you can feel it. You can feel it within the group, which is really nice. So you talked a little bit about some of the companies that you've invested in the past. Tell us some of the, you told us one about the miss, but tell us some of the highlights, the success stories.
Yeah, there are so many. And people always ask me, what's your favorite company? And it's not, of course, you love your companies that are going to return the fund, that are huge, that have already become successful, but also the newer ones, the ones that have gone through changes and challenges. Like those are super precious as well. And maybe you learn the most from those. But I think I love our portfolio because every single company they're doing something good for the planet, for our society, for our culture, for the next generation. So pretty much all of our companies have a sustainability angle as well. This morning I was catching up with one of our companies, August, which is in sustainable period care. They have been really a flag waver in that space, which was full of stigma and taboo and unnecessary taxation. So they've been really pushing forward a lot of change in that space, and I'm super proud of them. Yesterday, I was having a board meeting with one of our companies called ZZ Driggs, and they have really grown a lot and are on their way to become the furnishing and design solutions for US real estate and hospitality. And with a 3-person full-time team, they are tackling some of the largest players in the country and winning really big contracts. So that makes me super proud as well. And they started by wanting to become the Patagonia for furniture because furniture is such a wasteful area. Like IKEA alone consumes over 1% of the whole world's wood supply. And it's crazy if you think about it. And furniture was built to last beyond our lifespan. That's how it started. But now it's designed to go to waste every 3 to 5 years. So that's a drastic change that changes the landscape of our planet. And I'm thinking of a Vancouver-based company called Light One, which turns bacteria into colors. Coloring is actually the most wasteful and polluting aspect of textiles and apparel. So all the fast fashion companies, they have created so much forever toxins in the water bodies. And it is a very big, oh yeah, this company is using very advanced biomanufacturing techniques to turn bacteria into colors for textiles, food, cosmetics, for wall paint, etc. If you think about it, colors are everywhere, but we don't think about the environmental impact. Yeah, so now we're just exploring all the different areas that create massive impact. And okay, I'll have to talk about the most successful companies in our portfolio as well, including Everly Health, for example. They're an at-home health testing company. They were the first one to come up with an at-home COVID test during COVID. So that was huge. They were an innovator and they continue to do that. And they're now offering a full suite of health tests that you can do at home. They also power a lot of telehealth services for other digital health platforms now. They own their own labs. So we invested back in 2017 when they were a seed stage company valued at mid-teens millions. And now they're multiple billions enterprise value. So that's a very successful case study. And they became a unicorn within 4 years from our first check. So yeah, it shows you that investing in a solo female founder can yield amazing results. And we're betting on more and more of those stories happening.
Yes, more and more. Before we started recording, you were talking about there's some different ways that you've been investing lately, maybe even personally. So tell us more about that.
Yeah, I think investing is a mindset, right? I think once you put on their investor hat, so many more opportunities will open up to you. I used to tell people who have executive level, like senior kind of experience and expertise to be advisors for companies and get equity from it as a way to get on the cap table. And I think nowadays I'm looking at just interesting ways to be savvy as an investor. So two areas I'm just learning about and haven't gone into, but maybe in the future, include one is like a search firm, which is a very small space in private equity. So basically, if you are, a good operator, you can go on this journey to search for businesses to buy. Usually you're searching for a business with a positive EBITDA of 1 to 5 million. And the goal is you convince the owners to sell it to you. And then you operate a business, you take it over, you grow it to a bigger scale so that in 5 to 7 years, larger PE firms would be interested in buying this business. And it's a little similar to venture, but it's more PE style. And besides doing it this way, you could even just search for these small cash cow businesses that have been operating, that have been profitable, that have been having a stable line of books. You can just have passive income by owning these small profitable businesses. It could be a gas station, it could be a nail salon, it could be a small accounting firm, it could be a birdhouse business, it could be just some random stuff that actually makes money so that you can have some passive income. And what I do know was that you could acquire these businesses with not that much. So you can finance the purchase, you can just put down a small down payment, and sometimes you don't even have to do anything with the business. If you're savvy, like you want to update the business to be more digital savvy and more tech enabled, go ahead. But sometimes you don't even need to do anything. But you just make, I don't know, like 600K a year with a relatively reasonable upfront commitment to take it over. And there are firms who will even finance your purchase or help you pay the down payment. So this was something I didn't know about, but it seems super interesting. And it seems that only 16, 17% of these searches are women operators. So this is a potential genderless investing opportunity that seems very promising. Another thing I recently learned about was actually film related. So lots of films, they get tax credit, they get grants, they get different investments right before production. They might be very short on cash. There are companies that are floating these film production until like maybe 6 to 8 weeks before the film starts. And it's when these other funders have already signed on, but their money hasn't arrived. So it's relatively quite low risk. And you could be making pretty good interest in a very short period of time and with pretty minimum downside. Oh, another one that I'm just thinking of is being a personal guarantor. So if you have massive assets, there are ways where you can be a personal guarantor, just make, say, 3% on a debt facility, and you don't need to put any money up front. Instead, you're just taking on the risk, but you also have first lien on the company that's taking on the debt. So if you believe the company is worth more than the debt facility, then you could just take on a little risk and make a few $100,000 in a few years without putting any money up front. So yeah, I feel like there are so many ways to play in this venture, business, finance world that many individuals, high net worth, ultra high net worth, are not yet familiar with. So yeah, I think it's fun.
It is. There's so many things.
Yeah.
Pocket, before I let you go, tell us a little bit about where you see SoGal in 5 years.
Ooh, I think in 5 years, we would have had some major exits from Fund 1 and potentially in Fund 2 as well, which will be very exciting. Venture has such a long illiquid cycle. Sometimes you're like questioning, why am I still here? What am I doing?
I do that a lot, actually.
Yeah. I think in 5 years, we will see massive impact created by our portfolio companies. We are already seeing it, but I think in 5 years, we'll be on a new scale, on a new level, where we see every household might be interacting with some of our portfolio companies and many of our companies becoming household names. And there might be innovative ways that we explore capital access and being a disruptor in. I am constantly interested in what are the new boundaries we can play with and what are the new frontiers that we need to participate in. So I think technology is changing very rapidly, and that means new opportunities and new possibilities and new rules and new winners. So I think I'm super motivated to play and to create and to continue to explore with the ethos of doing good in mind. I think that's where business is heading at, or at least that's where I think the younger generation is craving for and demanding. So that's the territory I want to occupy.
Great. So if any of our listeners know of companies that kind of fit that criteria, should they reach out and let you know?
Yeah, they can always reach out on LinkedIn. I'm pretty active there. And feel free to check out our portfolio at SoGalVentures.com/portfolio and support our portfolio companies.
Yes, we will definitely put all of that in the show notes so people can buy their products too, because a lot of them have amazing products.
Yes.
I'm a huge fan of Archeroos, Indie Wild. Yeah.
Oh, yeah. So many good
Morning.
things that you can be a customer of.
That's right.
Yeah.
Pocket, thank you so much for coming on the Angel Next Door podcast. It was great having you today.
Thank you so much, Marsha.
Thanks for listening. To connect with me, visit my website at marshadawood.com. And please subscribe, follow, and leave a review. It helps the podcast get seen by more people. And remember, you can also find the Angel Next Door podcast on YouTube too. And if you're looking to learn more about investing in the changes you want to see in the world, sign up for Ann and Bill Payne's ACA Angel University classes. Go to the angelcapitalassociation.org, all one word, to find out the schedule. And classes are now available on demand. Many classes are offered, everything from angel investing basics, which include fundamentals, risk, due diligence, term sheets, valuations, returns and portfolio strategy, and even a class on group formation. There's even a deeper dive where you can get advanced classes, including capitalization tables, startup boards, and exit strategies. If you're not already a member of the Angel Capital Association, you can become one for a low price that will give you unparalleled access to discounts, free webinars with a huge archive of content, networking opportunities, and much more. We'd love to have you join us. All content for this website is informational and not intended to serve as legal, tax, accounting, or investing advice. Well, Marsha, that's me, does serve on the SEC Small Business Capital Formation Advisory Committee. My views are my own and not the views of the SEC or my fellow colleagues on the committee. Our speakers and hosts are thoughtfully selected for their educational value, but their opinions are their own and do not necessarily represent the views of the host, me, or the Angel Capital Association, and neither specifically endorse the use of presenters' products or services. Listeners of the podcast should consult their own tax, investing, legal, or accounting advisors before making important financial decisions. All warranties, including accuracy, completeness, and suitability for specific purpose, are disclaimed.